Welcome back. Staying with the banks, and Westpac is putting its money into a disruptor in the space, ZipMoney. The interest-free payments provider secured the $40 million strategic equity investment from Westpac at 81 cents a share, 14% higher than the last closing price. ZipMoney co-founder Larry Diamond joined me for more on the investment and just how the platform works. Larry Diamond, thank you very much for coming in. Now, first of all, you've got to tell me what Zip actually is. What's the product?
Sure. So Zip is a interest-free digital wallet. So think about the credit card. You know, the traditional credit card was always very hard to sign up. Takes about 30 minutes. They send out a plastic credit card in the post. Banks tend to put you on the minimum repayment, and they're quite inflexible.
Yes.
So what we've created is a digital wallet really focused on interest-free and giving consumers a lot of flexibility to effectively manage their finances.
So how do you sign up? You know, if I want to get onto Zip,
Yep.
how do I sign up?
Well, the beauty about Zip is that you don't need to go into a traditional bank to actually sign up. There's actually two ways to sign up. So if you're shopping online, you might be on Luxury Escapes looking for a beautiful package. You can actually sign up at the checkout. You select Zip at checkout and you go through our sign-up flow, and we give you an interest-free digital wallet to fund that purchase and then future purchases.
So in other words, the customer is borrowing from you, if you like, to make those purchases to start with, and then they pay it back over time, or?
Correct. Exactly right.
And they don't pay, it's interest-free?
Interest-free.
Now, this all sounds too good to be true. So how are you making the money? Just the use of how do you make money?
Yes, our model is very much a mix of merchant pay and customer pay. So our vision is to see Zip at the checkout next to Visa, MasterCard, PayPal,
yes, but
offering interest-free payment flexibility. So we effectively present ourselves as a payment solution to the merchant. So we charge merchant services fees, much like a merchant would pay for PayPal or credit card.
So where does the customer end up paying?
So for us, we have a $5 monthly account fee,
right,
which a customer pays to have this digital wallet,
yes,
and we go anywhere from $1,000 up to about $10,000.
Yes.
When they have a balance, we charge the monthly account fee, but every transaction during that period is interest-free.
And how many merchants offer Zip at the moment?
We're up to about 4,500.
In Australia, or?
In Australia,
yes,
so we have an Australian credit licence, we have an Australian financial services licence.
Yes.
We're predominantly in Australia. We are doing a pilot in New Zealand at the moment, and we have ambitions to go there, but certainly Australia is a very large market, hundreds of thousands of points of presence that we want to see Zip at the checkout, and,
yeah,
and that's our vision.
Well, you've had a very big a piece of news today. Westpac's throwing 48 million, I think, at the company. Were you wooing them, or they wooing you?
It's probably a bit of both. I think for us, we kind of recognise that there's a wonderful moment in fintech, and we're very fortunate to be here. Time which is
because it's a big slug.
It is a big amount of cash, and yeah, I think it's a huge validation of our model, but very exciting for us because we can almost double down in what we're doing so well, both on the ZipMoney side, which is all around credit, interest-free credit and payments, but also on the other side of our business, which is Pocketbook, which is the largest non-bank app in Australia, which is all focused on savings and money management.
Okay, so 40 million in cash up front, and
yep,
then 8 million in performance options. How do they work?
Yeah, so it's $40 million up front,
yes,
and then over the coming period, we're going to look to form strategic relationship with Westpac. Those performance options are tagged to deriving revenue from the opportunities that we create with Westpac.
So you've got that, and of course they now own, what is it, 17%?
Yep, 17%.
And you've got relationships with NAB as well.
Yeah, so just in the last 3 months, actually, we've managed to cut two of the largest, I guess, fintech deals in Australia. NAB, fantastic advocate for us and really supportive of our debt funding. So we created a debt securitisation warehouse, which is what we use to fund effectively all of our receivables and transactions. And now we've managed to secure an equity investment, direct from Westpac.
So I'm thinking it's quite a vote of confidence, really, because this is a very aggressive space for the digital wallet. I mean, just who is operating in this space?
Well, I guess there's lots of players.
Yeah.
You've had the traditional players such as the banks. They've been the largest issue of credit cards, which is the way that most people pay for credit.
Yep.
And they've subsequently created
all the PayWave stuff.
The PayWave, the tap and go, which people are loving to do.
Yes.
But you've also got digital wallets coming from players like PayPal, Visa, MasterCard, and we're even seeing some of the social platforms starting to get into payments. Facebook, WeChat overseas. So it is becoming quite a competitive landscape.
Who's going to come through this? Because I do not want, a gazillion different players, whether I have a physical card or not, through which I do my transactions. Frankly, I only want one.
Yep.
So who's going to win at this game?
That's a good question. Look, I think it's, a few years ago, it was definitely retailers were certainly gravitating towards one single payment tender at checkout.
Yes.
I think they've subsequently realised that it's important to offer payment choice at the checkout. If you kind of look more broadly, I think credit card volume is pretty much growing in line with inflation, and I wouldn't be surprised to see it start to stagnate over the coming years. So if you're a retailer, it's very important to think about what is the right mix of payment options at checkout. Complementary, of course, you don't want 10 of the same thing.
Well, look, Apple Pay, PayPal, Afterpay, GE Latitude, HSBC, Facebook, Amazon.
I mean, there's a whole list of them, plus Zip, of course.
Yep.
They'll be all sitting there. Presumably, at some stage, they're going to have to be some sort of,
rationalisation.
carnage.
Yeah. Look, we see ourselves, we do want to see Zip at the checkout next to Visa, MasterCard and PayPal, but we're offering a very different value proposition. And that's all about interest-free payment flexibility and purchasing power. So you have a very different mandate to
So you're
seeing.
partly owned now by Westpac. Is that going to present a problem in terms of being, having a relationship with all the other banks as well?
No, look, Westpac, 17% shareholder, minority shareholder. We'll
Yeah.
certainly look to do some great partnerships opportunities with them. But we remain, fiercely independent. And
in fact, you wouldn't want to be taken out by Westpac, would you really? Because then it would be hard to be fiercely independent.
Correct, and we do have ambitions to really connect with all Australian consumers. Credit, payments and savings and money management. So it's very important for us to remain independent. I think this is more, a testament to what fintech's doing in Australia, and that banks are happy to partner.
And what about the cyber side, the security side? And look, we've just, of course, got this enormous story with alleged money laundering with CBA at the moment.
Yep.
How is a small fintech dealing with that sort of challenge?
Well, I think for us specifically, the good thing is we don't really handle cash.
Yeah.
So I think, sort of take us out of that conversation. Yeah. But, the beauty is when you have a team of only 130...
But you've got the data.
We have the data.
You've got all that data mining that you have, and that goes to privacy, doesn't it?
Absolutely. And we're very, very focused on data security, and obviously we procure a lot of data when we actually onboard consumers, credit data, ID data, which is a fundamental part of the way that we assess responsible financial services.
Yes.
And it's a very, very big focus for us. The beauty is when you have a smaller team that works much more closely together, all of our product and tech remains in-house. We believe it's much more easy to be agile and focus on a lot of these areas.
Yeah, so as you grow, that still has to remain tight. Presumably you're going to spend quite a lot of money on that side of the business.
Absolutely. We're beefing up our security all the time. And for us, as I said, product and tech is really a core focus of Zip. We see ourselves as innovating in the financial services space. The ability to very quickly create products, test them on the market. If they work, we'll sort of, amplify that spending, and if they don't, we'll kind of cut them.
Where do you work from? Are you in a hub, or where do you work from?
We used to be we work out of just actually above Stone and Chalk in the AMP building on Bridge Street.
Yes.
Sadly, they'll be renovating shortly, so we're going to be looking for some new premises. But yeah, very close to the fintech hub. Our acquisition of Pocketbook last year was, I guess one of the earliest fintech to fintech deals done in Australia, and we want to continue to do that. So it's very important for us to remain close to the ecosystem of fintech over here in Sydney.
Larry Diamond, congratulations on a great deal. Thanks very much.
Thank you very much.
And after the break, live to London for the latest on markets.